Hello and welcome to KYC. I am Sharad Dubey and with me is Puneet Zaveri. And today the company in focus is RR Kabel. Of course, the numbers have come out and a decent set of numbers coming in. But the street, Puneet wants to know a lot of other things as well. Management's commentary, their capex plans. So let's actually go ahead and see what we are actually expecting, what I actually want to know about this company. So first and foremost, of course, the important portion is the capex expansion. These plans, especially in the cable wire segment, this industry has been going really well. And now the capex expansion, that is something which the street is actually factoring in. Also, interestingly, other factors also like the key demand triggers and the client confidence overall in the cable wire segments, which are the new areas which we will be looking forward to. These are something which we will be asking the company all about. The FMEG segment, that's the new segment, right? That's roughly the key strategic plans coming in, only 10 or 11% of revenue contribution coming in. And lastly, we would like to also point out the foray into value-added segment, the products, the high margin segments. So this is what we want to know about the company.
Well, largely, and there are multiple key aspects about RR Kabel. What's also interesting is the current listed space of how it is, because we have something like a Polycable, something like a Havels, which are amongst others. So we will be putting on a focus if this is the company that you need to watch out for in the cables and wire space. Of course, when you start with about the company, it's one of the fourth largest wires and cables player by value terms, essentially in 2024 and 2025. Bless you, Sharad. But we have seen that the other players that I just mentioned have been dominating the news flow over the last few years. But in the last 6 to 8 months, this company has come back on investors' radar as well. They have planned a capex of about 1,050 crores, and this will be to expand the company's capacity as well to almost 36,000 million tons per annum. It will give them the necessary operating leverage benefit as well because of this added capacity. Amongst others, they do have 5 capacities. 3 are from the FMEG business, continue to be 2 for the company in terms of the wires and cables business. And of course, these are some of the key products as well. But in terms of industries, as is well known for wires and cables, residential, power transmission, data centers, which is a key segment now in terms of growth, is something to watch out for. But Sharad, take us through the revenue mix now as well.
Well, it's pretty interesting to see the revenue mix, but it's highly skewed, almost 90% for the wire cable segment and only 10% for the FMEG segment. Interestingly, we pointed out the metro construction, OEM and data center. This is also something which we'll be watching out for. But now let's focus on the key parameters, Puneet, for KYC. And first and foremost, the parameters, they include income statement, balance sheet, cash flow, return ratio, shareholding, street cred, valuation, and overall outlook. And out of these 8 parameters, we'll be judging the numbers and we'll be giving our entire KYC rating. And we'll just start with the income statement first. That's largely, we could say, the revenue going at a 3-year CAGR of 20% growth coming in. EBITDA 17%, PAT on the lower side, that's roughly 13%. So there is a kind of a divergence in the top line and the bottom line. But Q2 earnings, that's very important because of that. Stocks also reacting in a positive way in the day's trade. Revenue is up 20% on a year-on-year basis. Margins, that's a significant jump up. It was 4.7% last year in the second quarter. Now on a year-on-year basis, that has jumped to 8.7%. Value-added products, that's what Puneet had mentioned earlier. Even the net profit numbers, that has also gone up. Based on Q2 earnings and what the history has been of the overall income statement, I would still give it a neutral rating.
Well, the second key parameter that we look at is, of course, balance sheet. And here, the strength of the company has been building in over some time. They have been working towards it as well. But when you look at the last couple of years, you'll see that stark jump in the company's book value. Borrowing has been reduced, and in terms of cash and bank as well. What you will also be interesting is to see first the book value. It's gone up from roughly about 1,250 odd crores all the way up to 2,153 crores by the end of FY25. So almost a 60% jump we've seen. Borrowing is all short-term borrowing. The long-term borrowing was roughly in about 60 odd crores in FY22. That's reduced to 0 now. But the short-term borrowing has also been reduced, essentially showing the company's strength in the working capital management. So we've given this a thumbs up, largely on a decent set of, more than decent set of numbers in terms of the management of cash flow, as well as increasing the cash and bank, lowering debt. So all 3 get a thumbs up from our end.
Well, that's a pretty interesting segment to actually look at. For the cash flow segment, I'll just add a couple of more pointers to it. The cash flow to PAT conversion, that has seen a significant uptake coming in. from FY24 to FY25. See the numbers. It was earlier 114%. That has gone up to 158%. Operating cash flow, that has also picked up and almost touching the 500 mark in FY25 as well. Net cash flows also on the higher side. So it's a thumbs up rating when it comes to the overall cash flows as well.
Well, the other key metric that we're also looking at is return ratios. How has the profit actually translated in a better utilization of both ROCE as well as ROE? Now, we are being really critical of the company because they have been able to do stellar numbers in terms of the return of capital employed, over 15% over the last 4 years. They touched a high of about 22%, and over the last year, because they have been investing heavily in terms of new capacity, we just spoke about the overall capacity and the length it will go to, we have seen some essential fall in terms of ROCE. In terms of ROE as well, the profits have been generated, so that has been helping the company in maintaining their ROCE and ROE level over 15. So we are being very, very conservative of the company's strength. Essentially, at this point of time, this would have been a neutral in most cases, but we will have to give us some perspective given the other players have been doing better ROCE as well as ROE levels as well, and more established in the FMEG segment, could see some pressure because of that. So we've given this a thumbs up, thumbs down for now at least. But shareholding, Sharad.
Well, that's pretty interesting. Shareholding pattern, the promoters' shareholding, that has largely remained stable around that 62, 63 odd percent. But the number to look at was both the institutions. If you look at FIs as well as DIs, they have been increasing the stake. This number in March 24, that stood at just 4% for the company for FIs, but that has doubled, coming in at 8%. And do remember, no dilution from promoters have taken place over the last 2 years after its IPO had come. DI's number, that is also significantly looking strong from 9% in March 24, a slight downtick coming in March 25, but still at a healthy 14 odd percent. But retail participation, that has become less. But nevertheless, I would give a thumbs up rating for it because the institutional participation, that has doubled, and that augurs actually well in the long term basis also for the stocks as well.
Well, the other ones, of course, the street cred, and we give some impetus to this because of how the shareholders have been rewarded. Now, in the last 1 month itself, because of the company's stellar Q2 earnings, we saw the share price reaction in the last 1 month. That momentum has continued in 6 months. And I want to stay with that for a couple of minutes because you did see post Q4 earnings when they came in April and May. You did see the company getting rewarded because the stark jump that you saw in income statement, cash flow, as well as balance sheet. So it has been quite instrumental in terms of turning around and increasing as well as achieving the goals that they had stated towards shareholders over the last couple of years. So in the last 6 months, we've definitely seen a re-rating of the stock. The other key trigger on the street cred has been what's happening over the last 1 to 2 years in terms of entries of giants in the space. We saw Ultratech coming in the cables and wire space for captive use. We also saw the Adani Group as well, and standard disclaimer also on this one. In terms of entering the space, and there was some concentration as to what will happen in terms of the demand. We saw a sharp downtick on the share prices of all cables and wires players, and hence post Q4 earnings, you started to see that a lot of those concerns had been allayed. The companies had been stating that the capacity, given their own capacity, is quite minimal and that is for their use. So you did see a lot of long-term shareholders come back as well. In that case, RR Kabel's valuation compared to the other ones were quite conservative, to say the least, because of the turnaround that the management had been able to employ, at least in terms of the financial, and hence this is essentially in the last 1 year been largely stagnant at a downtick of 5%. But the real story started post Q4, and hence that's been one of the key aspects of us giving this a neutral rating.
Well, that's pretty interesting. Puneet, you spoke about the valuations, and that's a very important trigger. Not much happening, and the entire, you could say the re-rating started happening in the first quarter from the industry's perspective. But Polycab, KE Industries, and RR Kabel, on a 12-month forward PE ratio, Polycab and KE Industries on the higher side, almost 40 times its price to earnings ratio, but RR Kabel still cheaper, coming in at 34 times. So amongst the three large players, on the core players in the wire and cable segment, RR Kabel does look on a cheaper side, and there seems a long return potential could be there as what the analysts might be expecting from the current levels. So it's a thumbs up from our side. And what will be the last parameter?
I think it's definitely the outlook, right? Because while the valuation do give and do provide the comfort to its shareholder. The first key point that the demand outlook has largely remained quite strong for the cables and wires segments. The other impetus of growth has been that the domestic market has been growing well, but also don't ignore the export market, because while the company does not quantify in terms of what has been the beneficial margins for the company in the export market, it is higher to the current domestic market, and that's something that we get from Polycab as well. When you look at the second key outlook, that is operating leverage playing out on operational efficiencies as well. And let's stay with that for a minute, because we have seen the company largely increasing its capacity that has been led by high utilization. So the company's, we maybe mentioned the ROC and the ROE has been doing well. The additional kicker because of that has been the operating leverage kicking in. And in some quarters like Q2, you do see that coming down all the way to the profits. You do see that in the cash flow as well, that a lot of cash does get opened up for further expansion and use as well. So that's definitely the second key point. The third one, seasonal headwinds that we've seen largely in the FMEG business, and that's largely in Q2 that we saw similar to what the other players did. For RR Kabel, this is in my personal opinion not priced in the pricing, and that's what most brokerages also mention, because you do see that compared to Polycab, it is a smaller share. Compared to Polycab, it is not yet profitable on the EBIT. So when you look at the standalone business or the wires and cables business in terms of the EBITDA, the consolidated has a lower EBITDA because of the negative impact that comes in from the FMEG business. And finally, in terms of execution and growth momentum, largely is expected to remain strong. And hence, when we talk about the company's growth in newer verticals, when we talk about the company's growth in wires and cables business, they have been able to identify key white spaces, address those. New demand has been addressed, and also allied in terms of competition as well. So that's largely on the outlook of the company as well. And that's largely the KYC for RR Kabel as well.
Well, let's revise the KYC ratings for this company. Initially, the start for the income statement, cash flows, and even the balance sheet. Let's just pull up, entire rating setup coming in. Largely neutral coming in from income statement, but balance sheet and cash flow, the core financial ratios to look at, they are on the positive side. We have given thumbs up to both of them. Return ratios also not much happening, and it's a thumbs up from our side. Shareholding, institutional participation has jumped up. Street trade. For short-term players, of course, investors, there was a good returns, but still the company needs to prove its metal. Valuations, cheapest stock in the cable wire segment, and outlook largely neutral coming in. So total KYC rating from our side is at 5.5 out of it. That's roughly on a higher side on our average numbers, which we generally give. But this entire space itself, Puneet, you track this segment, it's basically three large players are there, but the demand, especially, like the signs of private capex picks up, then this becomes a good, beneficiary to it. So how do you look at this industry now? Like monsoon is also about to be over. A lot of announcements are coming from different sectors.
I think what's also interesting is how the space is now developed, right? Because we do see something like KEI Industries, while it doesn't offer in the consumer vertical, a lot of investors have been giving it the view as well in terms of industrial cable. So that benefit does come on something like a KEI Industry. Polycab, we have discussed about how in terms of growth metrics, it has been superior and thus continue to command that kind of valuation. While something like a Finolex Cable has actually fallen through the roof because they haven't been able to continue essentially in terms of the growth that they were mentioning. And last time when we did see the impacts essentially of higher copper prices, that's the other one. We did see all these three players being able to maneuver in terms of the expenses being lowered, in terms of also having that benefit essentially in terms of the costing of the company being slightly impacted because of the higher copper prices, but seem to be that the company has been able to do that and take that in control as well. But the other key aspect, Sharad, has been the copper prices. We have seen the volatility come in, while the companies have been able to mention that they are able to pass it on in terms of with a lag of a particular quarter.
I think there's a 2-3 quarters lag
essentially,
in, right?
which does impact the copper prices, and we continue to see how that maneuvers as well. But to talk more about the company, to talk more about Q2, to talk more about what the management is expecting going forward, I'm now being joined by Mr. Rajesh Jain. He's the Chief Operating Officer at RR Kabel. Mr. Jain, a very good morning to you, sir. Thanks so much for joining and giving us time here at NDTV Profit. Firstly, season's greeting to you. for this festive season as well as everybody at RR Kabel. My first question largely in terms of the growth that we've seen in the wires and cable segment. It's continued to be strong for you, over 22% growth that we've seen. Currently, how do you see that on the ground in terms of your strength as well as your competitive intensity?
Thanks and greetings to you and our all viewers as well. Yeah, of course, we have seen a very good growth momentum in our wire and cable business, and looking to micro level factors, we are expecting that we will maintain the same growth in coming half of this year as well.
Well, that's pretty interesting for this growth aspect of yours. But let's look at the entire raw material numbers. Of course, the copper prices, they are very volatile. We saw that they went on the higher side, supply side constraints also coming in. How is your hedging strategy for the raw material segment? That's first question I need to ask. And is there any kind of pass through happening? And if it happens, what would be the time limit for it?
So yeah, as copper is the biggest raw material, and we have seen volatility in all previous years also. In this year, we have seen upward movement to a great extent, but at the same time, we have like two mechanisms for copper price hedging is concerned. Like first, we have B2B business or export business where we have 100% back-to-back coverage. Whatever my customers place order, we cover, and that business is risk-free. And when B2C category is concerned, there is like a practice where whenever there is upward or downward movement of say 2 to 3%, we change our list price as well. There is like some time gap, like we see if the movement is in say last 15 to 20 days, then we'll change our list price also. So in that sense, there is a price mechanism where we keep passing on this price movement to our consumers with a time lag of say 15-20 days.
Mr. Jain, point well taken, and we did introduce you as the Chief Operating Officer of the company, and that's a new role for you starting November 1st, so many congratulations for that. What could be the priorities essentially in the wires and cables business for you going forward in the medium term, of course, because we have seen that the EBIT margins have been quite strong for the company, have recovered very well on a YY basis as well. What will differentiate RR Kabel going forward and your role at the company as well?
Yeah, thanks for your congratulations. And I have a vast experience and associated with companies since a very long period. I have seen closely operations since beginning of this company. So, and since in Project Rise, we have planned a good volume growth as well as improvement in margins. And I hope being now given new responsibility, I'll be able to give more time and more closely will be able to monitor our operations and improve margins. So that will be my prime focus to achieve and align with my overall company goals.
That's pretty interesting. Mr. Jain, FMEG segment, though it's just contributing 10 to 11% in your revenue, there's an impact seasonally also seen. That's what largely the consumer durable players also faced. But now in Q3, of course, this is a very small contribution of your revenue overall, but you have been developing, you have been putting in R&D and everything else, even in the distribution works. How is the FMEG segment looking? Now the GST benefits will also kick in the third quarter. Consumer durable companies' commentary is also improving slowly. So what is your update on this segment, and going ahead, what do you expect at least for the next 2 quarters?
So as rightly said by you that FMEG is contributing around 10%, but at the same time it is like we have very good focus and we'll keep improving our sales distribution network, and by like more focus on more value-added product or by expanding my distribution network, FMEG we are expected to get break even by this year and at the same time doing better than industry average. As you already seen, like even in this first half of FY26. We have performed better than industry average, and we'll have a focused approach on this business segment as well.
Mr. Jain, just one question, coming back to the wires and cables business, because, we have seen the competitive intensity go up, but so are the growth areas. So how are you differentiating essentially in terms of getting, your products in areas like data centers? Is that a growth area that you've looked at, and what's the strategy in terms of increasing that segment for you specifically, because we have seen a lot of other players also get that benefit of operating leverage this quarter. So what would you suggest to investors that we need to monitor going forward for you?
So data center is, of course, one of the major area from where growth is coming, expected to grow for Indian wire and cable industry as well as for us also. At the same time, we are expecting to have a good growth from my export market or within India also from like having high growth in cable where we are expanding a lot in coming 2-3 years. So our focus will be on domestic as well as export and wire as well as cable segment. So overall, we have a good growth plan where we can achieve growth from each and every sector.
That's pretty interesting, Mr. Jain, for this growth aspect of it. But industry-wise, Puneet had asked you about these questions. Of course, data center OEMs coming in. But product-wise, you are in control cable, power cable, and even house wires. Are we looking at any other product-related differentiation? We spoke about, of course, industry-related differentiation, but product and geography. Are we looking at new expansion plans in geography and any product, any new product coming in? And if yes, since you have a great history in operations, you could just give us some light on that.
So first, if we talk about product level, then of course we are much ahead of the industry. We are the only company who has 100% RoHS and REACH compliance product, which is better and in interest of consumer as well as environment. And since we are largest exporter also, so we have very good presence in European market or Middle East. And by this, keep like growing focus on new markets, new geography, and new products, we'll try to do better than industry average.
Mr. Jain, you had really strong volume growth of 16% this quarter. Do you expect that momentum to continue in Q3 as well?
So we are targeting to achieve volume growth of 18% on YOY basis, and we are on line with our targets.
And in terms of margins as well, EBIT margins for the wires and cables business had a really strong run. Straight jumped to 9.2% now. But we've also seen a similar jump for the other players. While you might be at the lower end of competitive margins, where do you expect a steady state run rate? Should we expect 10.5 to 11% maybe in the next 3 to 4 quarters for you?
So, like we have planned to achieve this double-digit margins in next 2 to 3 years, and we are on that path only. If we see on a yearly basis, like last year, my wire and cable EBIT margins were in the range of 7.4%, and we have targeted by improving by 100 to 110 bips, and we are on track. And still we are on the same hope that in H2 we will we will do further improvement and achieve this kind of growth.
It's pretty interesting. Mr. Jain, capex plans, that's something I'd like to know. 1,050 crore capex plan has been there, and this will expand the capacity by almost 36,000 million tons per annum. If you could just give us the current capacity utilization levels and what would be the timelines for this capex plans?
So, like this 1,050 crore is for our one facility, and if we combine our overall capex plan for wire and cable, we have planned for 1,200 crores over next 3 years, and we are on track where our major focus will be expanding on cable capacity, since still our capacity are very low in looking to market size and growth expansion. So our major growth and expansion will come in cable segment. At the same time, we are having a very good utilization where almost 70% utilization we have in wire segment and almost 90% utilization in cable segment. So we have to focus on the new expansion plan also, and we are on track.
Mr. Jain, one final quick question. Your FMEG business actually got impacted in terms of revenue, was almost down 3%. Was that largely because of buyers being away from 15th of August, and do you expect that to come back in terms of growth next quarter?
It was like impact of this year. India had a very big monsoon season, and since major of our sales is coming through fan, where this impacted at industry level also. At the same time, what I understand, we were the least impacted company, and only 3% was the impact when we see and compare with industry. So in that also, by our introducing of new products and expanding our distribution network, we are online, and we are quite confident to achieve whatever we have guided at the beginning of the year.
Well, interesting views coming in for RR Kabel. Thank you very much, Mr. Jain, for joining us and giving the views for the company and the outlook ahead. But our entire conversation, what we had, the entire KYC show, what the management had stated, Puneet, there are 3 important points coming forward. And the first of all is they are maintaining a strong momentum for orders in H2 as well. H1 also the numbers are pretty much on the strong side. There was of course questions coming on the price, raw material prices, and the volatility. It seems hedged for both the B2B business and on the slower side in the B2C business as well. Management mentioned about 10 to 25 days of impact coming in. FMEG segment, that's expected to break even this year. Concerns coming in the earnings, but the break even number for FMEG segment, though just 10-11% of revenue, is going to happen this year. So this is pretty interesting. The management takeaways coming in for KYC and RR Kabel is in focus. But that's it for the show for KYC. Stay tuned to NDTV Profit. Thank you.